Hey traders, Parker here with another indicator. Actually, an update to the price volume average with ATR indicator. I actually took ATR out of it and I added in the squeeze into this indicator. So if you're familiar with the indicator, what the main thing of this indicator is price average. I have it set to 12. 12 bars on a 5 minute chart gives you an hour. So price and volume are in an uptrend or increasing, then you get a bright green. And if price and volume, if volume is decreasing while price is volume is decreasing while price is uptrending, you get dark green. That's what you're seeing right here, and the vice versa. So volume is increasing and price average is decreasing. If volume is increasing and price average is decreasing, then you get bright red. And the opposite, if volume is decreasing while price average is decreasing, you get this dark red. So this is the main indicator. Some of the features that I added to this was a momentum cloud. So I'm going to add this on. And the momentum cloud is based off percentage of the price average. So right now I have it set at 25%. So 25% of the length of 12 is going to be 3. So that's what my momentum is. So the average of 3 bars is rises above 12. Then that's what you're going to use as your momentum. You can go in there, you can shift and change it as well. Whatever makes you feel comfortable, whatever links you're comfortable for. So the momentum cloud that I put in here would shift from white to pink. And you can see the shifts right here. And there's the momentum between two price averages, basically. And I'm a time-based trader, so that's why I put in percentage-wise. So I care about if 25% of the average length is above the full length, then I want to care. And that, to me, that's momentum. And that's how I use it. And that's how I trade. I'm a time-based trader, so I look for 25% or more of the average that I'm using to be above the actual average. And I want to know if price and volume is in there as well. Another aspect that I added to this was was a momentum difference. And that's what you're going to see now. So if both move averages are pushing up, you'll get green. If both move averages are pushing down, then you'll get red. And they basically these dots basically sit in the middle of the two move averages. And I'm showing it like this, and you can see where it really was effective over here, or it helped you get out of the stock right here, or get into the stock over here. But you can see right here, you got two red dots with the lows. Let me zoom in. But you didn't break below the actual move average. So this one will be more valid because it broke below the move average. While this one right here, these green ones right here is giving you a preemptive move. Hey, the two move averages are moving up. So you want to look at that. And that's how I get and there's labels involved with this too. So if these are green, you get a green label, Momo up, and if they're going down, then you get a red label over here. It says Momo down. Let's see if those labels are working. Show labels, and you can see where it says squeeze, but we're getting that next. So you got the momentum down actually, and that's exactly what's going on over here. You got your red right there, those red dots. So another feature of this is I add in the Bollinger Bands. So now the actual Bollinger Bands are there. So this would have worked out real nicely if you got this push down to this lower Bollinger Band with a push up. And, you don't know, you have to push. You have to see what volume looks like if volume is increasing. But right now it's showing volume on average is decreasing. So that's why you got these dark green candles right here, or the actual average line is dark green and dark red, and you got this really picked up over here. But you can count this almost as a reversal, and you can look at like this was a push back, but price just could. I mean, this 2 deviations above price, and price just kept pushing through it. So, and you can look over here and see where price and volume started decreasing. Right here, price on average was increasing, but volume on average was decreasing. And you can see that's almost as a sign of a reversal where the stock is losing steam. You always want to look at volume as interest. So if people are interested in the stock to the bullish side, you get this bright green color. On average, people are interested. And if they're not interested, or if they're interested to the bearish side, you get this bright green. And you can almost look at the moves being accelerated. And that's what you got over here. You got this acceleration. So I added in those Bollinger Bands. The other thing I wanted to show you was the actual squeeze. Yeah, those are Bollinger Bands. There's the difference. Here's the squeeze. So the squeeze comes in non-squeeze, squeeze 1, squeeze 2, and squeeze 3. The most powerful squeeze is squeeze 1. Or you could say the tighter squeeze. And I actually add in the Kelter channels as well. So this actual stream of the squeeze right here is actually the Kelter channel. And if you know about the TTM squeeze, is based off the Bollinger Band and the Kelter channels. And the Bollinger Bands are inside the Kelter channels, then that's exactly what happens. You get a squeeze notification. So you can look right here and see this is a low squeeze, and you're squeezing, even though you can look right here is your with the TTM squeeze, it uses the momentum of the stock or momentum of the close, and you can say right here, hey, the stock is squeezing down, and this. Let me change the average scale so it fits this indicator, so it fits studies. So now we can see this right here. So for the most part, and then the stock started squeezing even more. We went from dark blue to bright blue, baby blue to yellow, which means this is a very tight squeeze. And you can see the shifts in the squeeze where it got tighter and tighter, and then it started releasing here as it shift back into the baby blue into the dark blue. And that's how you want to use the indicator. You're familiar with the TTM squeeze. That's basically it. Instead of your momentum being your close minus close on for a couple of bars, you're actually going to use the actual price average, and you're going to use what I programmed in here as your momentum. The two move averages or the two move averages, and also these dots right here where I call them, you can basically call them acceleration dots. If the two move averages are pushing up on average. So that's what's happening here. And you can see right here, this stock hit this Bollinger Band, and basically it squeezed through here, the squeeze lowered, and then you had this high power, really tight squeeze right here, and you got this push above with this acceleration. Another feature of this indicator is no momentum cloud. I showed that the labels are there. You can paint the bars just the same way I did in that other video. Right now, the bars are being painted off of my relative volume standard deviation indicator. So we can have actual lines that shows the shifts in between the squeezes as well. So if you didn't want that the squeeze line right here, or the squeeze indicator, you actually have the different shifts, and that's where you're seeing these different shifts with these vertical lines right here, and they're just shifting through and letting you know that, hey, the stock is squeezed, is potentially squeezing up or down. And another feature along with that, you have the audible alerts. So if you close that and you came over to the alerts, that's what you would get. You can shift and change these different alerts. You could enable them or disable them as well if you don't want to hear them. But that's the squeeze, and you can change whatever I put in the message as well. You can change the different sounds as well. So for squeeze 1 and 2, you'll get a ring. For squeeze 3, you'll get a ding. and there's different globules. Where if you don't like the different colors that I've chosen, so this would be the cloud right here, and this right here would, excuse me, would be to change the painting of the bars. So what I do is come down here and just stop my indicator from painting those bars and actually show you the bars being painted. And you can see how the bars are painted with the indicator. And you can see they pretty much follow the same move average as well. And it just, for me, it gives you a preemptive move that, hey, the stock is losing steam. And that's what you basically see right here. The stock is starting to lose steam to the upside. Had I already hit the Bollinger Band here and started just channeling right here, it tried to push above, but it's on low volume. And finally, it gave up over here. And the same principle works for the downside as well. You can see right here, price average is moving down. Price is moving down on average, but volume is moving down as well. So the sellers are losing steam, or that's how I look at it. Sellers are losing steam. And remember, I'm not a financial advisor. I'm not licensed or anything, but these are some observations that I made in the market. So for the most part, do your own due diligence about using this indicator. I'm explaining to you how I use it and how I found it best used. But you can see right here, volume is moving down on average and price is moving down on average. So it means sellers are losing steam. And that's when you start seeing your squeeze down here. You got this squeeze one right here, this where price is getting very tight. And you come down here and it shifts, and then you got this push above. And I would be looking for volume to confirm this as well. But this bar right here looks real nice. But for the most part, you start seeing volume confirming this on these different shades of color on the actual indicator. So I'm going to stop it from painting, but that's what you want to look for. But for the most part, I'm going to stop this from painting. I'm going to use my relative volume indicator to paint the bars and give you a different view. That's one of the reasons why I'm showing these together, to give you a different view. And you can see right here, it's showing you the same principle. And this is a volume above average, and this bright green is showing you volume above one deviation. So this would be a nice entry right here. It broke above the price average on heavy volume right here, and then it went to low volume, and then from there it pushed above on volume above 2 deviations to the bullish side. And basically you just got low volume, but everything is basically in an uptrend. So, and you got your squeezes down here, and these are different phases of the squeeze. The yellow is the tightest squeeze. The bright blue is like a mid squeeze, second to the tightest, and the dark blue one is the weakest squeeze. But you can see how these squeezes are just going through these different phases where it's so tight, and now the squeeze start loosening up even more, and that's just prices loosening up and really being free to move, as you saw it. So another feature of this indicator, sign alert. So those are the features of the indicator. So with my strategy, the strategy I just showed you, we can actually see how effective my strategy is. So I'm going to cut these two on. So you have open long and you have closing long, and you have the short, open short position, close short position. Same situation here, open long position, close long position. So I'm going to cut it on, and you can see right here with this floating P&L, this is a feature that works with the different strategy indicators. I don't have a name right here, but if you choose to purchase this indicator, it'll be over here in your strategies versus actually with your studies. It'll be over here with the strategies. So And this is your profit loss. If you were in this stock and you want to see how profitable the strategy is, I'm going to leave this in the indicator. All you have to do is just cut it on or off. But if we want to see how profitable you would be, I think I have this on 10 day. So 10 day, 5 minute. So let's see how profitable we'll be using this strategy of the 2-line move average. So you can already see right here, we're taking some losses here, but I want to go overall. So overall, profit and loss for 10 days is $2,000 on $100 share at buying on the S&P 500. So your max profit and loss was $317, and your total profit and loss was $2,441.98 on a total of 142 shares. So you took some losses in the beginning, and that's one of the things you have to realize with this indicator, or with this, not with the indicator, but with the strategy of the 2-line cross. It just starts off bad, and if it's starting off in pre-market, it's not very reliable. But if you want to come over here, you can see where things became more profitable over here. Yeah, you took some losses, but for the most part, you made a lot of that stuff back up. And one of the things I wanted to say was I usually use this on a 12 on a 5 minute, because I want to know what's going on within the hour. And it actually gave you a cross right here to show you that you sold. So you'd have bought in right here, open long, 100 shares of the S&P 500, and you would have gotten out right here. Same situation here. You got in over here, gotten out right there on this bar right here. But on a daily, so I go to the S&P 500 because we're just saying that how profitable is my strategy. So I'm going to put this on 20. I'm going to leave this at 25%. So that'll be 5. So you're using a 5-day average and the 20-day average. And it's basically, it's a versus or whatever. But we're going to look and see how profitable you be. And you can look right here, you're profitable over time. You took some losses over here, but for the most part, you're basically still profitable. So we're going to pull up the report. And we're going to scroll down. So with this indicator, your max profit or loss was $6,300 and $6,331. So your total profit and loss from 33 trades is $26,895. So I think that's relatively good. So we can actually, what is this saying? There's not concerned with that. And it's saying Momo up. And you can see how, my volume is slated for 12 days versus 20 days. And you can see right here that, the 2 move averages are still pushing up. S&P 500 is having some trouble. And the reason why I chose the 20 and the 5, because there's relatively 20 days in 20 trading days in a month. Minus the weekends, you got 20 days left, and then you got some holidays there as well that you can subtract from as well. But for the most part, a week is 5 days, and that 5-day average and your 20-day average gives you a month. And 5% of 25% of a month, or 25% of 20 is 5, and that gives you a 5-day average. And if you the 5-day pullback, it's a 5-day pullback strategy that a lot of traders like to use as well, and a lot of traders like to use this 20-day as well. The 5-day was still above the 20 here, so you could have taken this trade right here and rode price up. And this was a nice, it pulled back to the 20, popped back above the 5-day, and the stock ran from there. So let's go to Tesla. and I think I still have this on a 5-year. So we wanted to look at it on a 5-year, and you can look at this as well. This is a very nice one right here, and it's on volume as well. You can see where price was averaging down, but price and volume was averaging down. But you got these green dots right here that popped up, showing you that on average the 2-move averages were starting to move up, or the mid of the 2-move averages was moving up. And you got one red dot here, so it gave you an early shift in the actual stock right here with these with your momentum dots right here, or your difference dots. And basically what these dots are really tracking is the average of the 2-move averages. And on average, if the average of the 2-move averages are moving up, then that's what these momentum dots really get you, or you can almost call them as acceleration dots. And that's what you see start happening. So we're gonna run the same report on Tesla, and we're gonna show report. And right off the bat, you took this $374 loss. And let's push it all the way down. So your max profit and loss was $14,289, and your total profit and loss was $35,225.96, which is really nice to me, especially if you're looking over Tesla over 5 years. So, and that's basically this indicator. That's basically how everything works, and that's what. For the most part, if you want to do this yourself, you come up to the strategies and to the move average 2-line strat, and that's basically what this is. But for the most part, adding all these other features, and that's what it focuses on mainly, is the 2 averages crossing above, or 25% of that move average crossing above of your main average. And that's how I changed everything, and that's how effectively this works. So we can look at another one. This might, yeah. So we can look at what NVIDIA, and this looks very nice for NVIDIA. So let's look and see what NVIDIA shows. So 31,000 max profit and loss was 10,000 over 35 trades. XLK is the technology sector ETF, and we just got an alert right here, squeeze 3, so it's blue. So this actually into the squeeze, and Momo is up, and you got your dot as well. So let's show report. 33 trades. The max profit and loss was $2,894, and total profit and loss is $8,728. So let's go back to the SPY, and we're looking at things from a long position. Let's look at things from a short position. So we're gonna not enable those two, and we're gonna enable our shorts. And you can look right here. You're taking these short positions right here where it says short, and then it closed short right here, because that position went into a long. And we can run the same report that we just ran, and you only made $10,000 trying to short the S&P 500, but your max trade on the S&P 500 was $7,318. So, and what else? I'm trying to think of another stock right off ban. Apple. Apple's just been killing it. It's been in this roaring up. So are my fields still accurate? Yep, my fields are still accurate, and it crossed above this 100 from what day is this? January 22. So January 22 was my high that I used for my fields, and this low right here were made in December 30th, right before January. and everything just pushed back above. So Apple's been really a tear right here. And we can look right here. So you can almost look at this indicator as a swing indicator, swing trader indicator. But I mean, if you want to do long term investments, well, this indicator does as well. But for the most part, it looks like it works better for swings than anything else. So let's show the report. And over 26 trades, this isn't a very good one, man. Over 26 trades, you made $5,483 versus your max profit at $2,077. So this is the strategy that I use. You don't have to use my strategy, but this is one of the different strategies that I use. And you can see how it can be profitable and you can take some losses as well. Oh, I'm still looking at things from the short point of view. So if you want to short it. So let's go to the bullish point of view and see what our strategy is. So with 26 trades, you made $15,000 over 5 years. And your max profit and loss was $3,453. So that's from a long point of view, and this is very nice. This basically straight uptrend. If you want to look at it a 20-day and a 5-day, and you got this breach below, and you can see where the price entered into the squeeze and it popped up. Same situation here. You enter in this squeeze and price popped up. I'm pretty sure some areas where price popped down as well. But for the most part, this is the indicator, and those were the features. And it was another stock that I wanted to look at. HKV. So this is a healthcare ETF. And yeah, my fields are still show report. So this wasn't a very good one. But all while you can see how everything's just rising, or your profits are rising. So let's see. And over 10 years, I mean, you got a better advantage, a better lookout. So let me look at the SPY on here as well. So let's run the report. Show report over 10 years. That's 30,000. So about 7,000 more than you did before. Over 73 trades. So let's bring it back down to the 10-minute, 10-day, 5-minute, and like I said, I use a 12, whatever you want to use. I'm going to change this back to 12 as well. So there's a lot of information out there about the TTM squeeze, and that's basically what this is based off of. And instead of using the momentum, and that's basically what TTM squeeze uses. It uses momentum. And this is set to 12. We could change our momentum to these bars. And let me get rid of this floating profit and loss. And that's basically it. And you can see this is the TTM squeeze right here, and I have it set to 20. So let me change this to 12 as well. It's still in the close. So that's basically it. You can see how this mimics if I change this. Mimics the momentum, you know. So that's basically it. And that's a TTM squeeze. And you can see right here where it start pushing back up on this momentum right here. And then you finally got this push above right here. And I think these red dots will be your squeeze indication. Yeah, normal or the alert. And you can see right there the stock just pushed back above. I took a trade on this stock right here. I got in down here. This is where I got in. I rolled it up here. And I think I sold 25% somewhere around here. No, I sold 25% at $5. So I was in at like 340, 350, somewhere around there. And I sold 75% at $5. And I think I sold the rest somewhere up there. But for the most part, what made me get into this stock, and I shouldn't be showing all these other indicators with this, but for the most part, it had this volume, and I looked for its next point of resistance, and it was sitting at 295 was this last resistance. I'm not going to use this resistance just because I usually draw my resistance lines off of the weekly chart. So if you wanted to look at it like this, I believe that it could at least go up to $5, and that's what happened. It squirted up to $5, $5.76, and that's one of the reasons why I took this trade. And this is just that old indicator I was telling you about, the price and volume average trend with ATR, and that's basically what it's showing. And you got this push right here. But this is one of the trades that I took actually using the indicator. And you can see where it entered in the squeeze, and then the shift started right here, and it pushed above. But I got in long over here. I saw that things was really moving around this move average right here, and everything was tight within the two Bollinger Bands. I know naturally 350 is a psychological point. These outer price levels actually help me out as well. They seem like they're squinch down the stock. So I'm going to have to release this. So we're not going to fit the studies. So, and you'll see 350 right here with this blue line right here. And this is $4. So that's what it's pushing off of, this $4. For these automatic price levels right here, or psychological levels right here. And you can see here's $5 right here, and you can see where the stock just started squirting up or pushing towards that $5 level. You had this blow off level right here, and then it kind of took the stock down on low volume after that, and it wasn't able to maintain those levels anymore. But it did come back here, retested this old resistance level becomes new support. So retested it here, pushed up, tried to push up higher, but wasn't able to. And then it came back to this level right here, found some support, but then collapsed below. Attempt was try to push back to that level, but it couldn't. But it did find support at this 450 level, and it just was just channeling from there. But this is basically going to be the end of the video. For the most part, you can see the different features of this indicator. So the different features of this indicator, you can change the close, you can change those, change the length, the percentage of the other average that you're comparing it to. Show labels, paint bars, signal lines, the audible alerts, the different globules, different colors. One other thing about this indicator. Hey Trey, this is not going to be the end of the video. I apologize. I forgot that I created this column for this. So if you're looking at the squeeze, don't pay the numbers. Just help you sort through the stocks, but for the most part, if we're sorting it for the squeeze, this would be squeeze 1, squeeze 2, squeeze 3, and if it's accelerating up, and the momentum is up as well, and then you have the acceleration down. So these are some of the other criteria as well. And this is set on a daily with the 20 period average. And these are the ones that are accelerating down. Remember, the acceleration comes from the average of the two, move averages. So that's what's going on here. So also, there's a scanner that goes along with this as well. So this is the scanner that I built for this. So if you want to see the squeeze, if a stock is just squeezing, if it's a bull squeeze, bear squeeze, and that really goes in accordance with the move average. If it's above the primary move average or it's below the primary move average, to be bull or bear. Acceleration up, acceleration down, acceleration cross when it first crosses above zero or comes into place. Momentum up, momentum down, or momentum cross up is just basically if it's happening now. And you got the average cross up. If the percentage of the crossover, if the momentum average crosses above the primary average or cross down. So this is what's in this scanner. So let me cancel that. What's going on here? So for the most part, so we wanted to, let me just pull it up. So this is the scan. So squeeze scan. I'll just add it to the, and I have it set for 20 and 25%, and 20 I'm using for my daily. But this is everything. I mean, you can have it on the chart, but it's not going to show anything. Everything is hidden for that specific purpose of it just being used as a scanning tool. So we want to scan. You can see the squeezes right here. That's a scan I did earlier. So we're going to look for anything that's squeezing or is according to squeeze 1. And this is what we get. So we got trip. I remember that one. So TRIP. Alright, so trip overall is been in this huge downtrend. And it's actually, let me cut those lines off. No. So we cut the auto alerts and those lines off. So in one sense, it had this big move to accelerate up to $65. And now we're all the way over here at $16. $16. So 65. So right now it's saying they're squeezing. I'm trying to find another yellow squeeze on here, and I may not be able to. Here's one. There's a yellow squeeze. And there's one back there as well. Here's one as well. Here's one that's to the downside. This was to the upside. So this is trip, and right now it's trying to fill in this gap. I'm gonna do this. So yeah, we'll look at it like that and put the gap according to the that right there. So for the most part, it's trying to fill in this gap that is created. So for me, you can try and play this to the low if it came back down to the low part of the gap, or you can look at it like this. Let's see, set an alert for $17. And it could be squeezing up, especially with this candle right here pushing up. And I think I still have my relative volume. Yep, I need to change this to 20. And that should give us a different color on that candle, and it didn't. That's kind of weird. This candle. Well, I got it close to close. And the other thing, I guess what I'm actually looking for is my signals. There we go. It's cloaked in green. So the signals indicator showed us. Let me cut the other thing off too. Here. So get rid of that. So what we're left with, and once I put my signals on, you can see this candle was a hammer candle. And it's a bullish candle. Hammer candle is that. So with the signals on, what you're saying is this stock broke aggressively above its previous close and broke above the averages. Even though the averages haven't crossed yet, you have your acceleration dot right there too. That little green dot that you can barely see because of the color of the candle. But for the most part, so we can almost look at it like this. I'm looking for a cross above 17 to go long. And you can almost look at it like this was support along these couple of bars right here. Well, for the most part, it's ranging, and I'm looking for a cross above 17 to go long. I wouldn't mess with it other than that, unless for a small day trade. Excuse me. This is another daily look of this, and you can see how it's kind of caught in this range. These different lines represent Fibonacci levels, and I shaded them as well. But this indicator isn't done yet. It's the one I've been working on for a while. I just found a couple of drawbacks with it, but for the most part, you can see how it's staying within this 38.6 fib right here. This would be your. I changed this to 2140 fib. Your 78.6. No, your 61.8. Your 50%. And your 78.6 and 100. But it's pulling from this high right here and this low, and that's what created this fib right here, or this Fibonacci box right here, or a consolidation box. And you can see right here where it's fluctuating right here along this fib right here, but there's the same signals we had on the other page or flex grid. So I'm looking, and you got tweezers, tops, and knocked it back down. Bullish, bearish engulfing, bearish engulfing. You have your bullish engulfing and a piercing cloud line right here, or piercing line, but it still wasn't able to break above. So we'll see if it breaks above 17. But back to the scanner. Let's look for something else. I guess you could say bear squeeze 1. And it should give us a red trip. That's not going to be right. It kind of sort of is right. Because the way I have this formatted, the move average has to be, the momentum cloud has to be above the primary move average. So, yeah, it didn't give me what I thought it would, but it still gave me something that I could look at or look forward to. So that wasn't a great one. So let's try 2. And let's go to scan. So all this is just showing me that they're in squeeze phase 2. It's not going to show me whether it's bullish or bearish. But for the most part, you can see, well, these are kind of bullish. REI. How much was that before I go to that? That was only $1. No. YMM. And the cloud is still turned down. So I probably need to reassess how I'm considering that bullish or bearish. It's been stuck in this long consolidation phase. So nothing else, it bounced down here. So most you can expect for it to go back up at 748. So we will say, I'm going to say if it crosses above 7, I would ride this up to 750. So if this stock can get above 7, even though you got, some resistance right here, I'm still going to look for something to go long at $7, possibly. I'm pretty sure you can make more than 12 cents out of it, especially if you swing it, and you can at least get 50 cents out of this. At least that's my opinion anyway. So it just says I need to make some adjustments to my scan. And the other problem is I have this percent right here, so it's not necessarily going to give me anything that's bearish. Except for S. I think that's Sprint. And why is it giving me something like this? Okay, I think I finally figured out what the bug was. So this is TTM squeeze. Well, for the most part, this is what we got right here. This is Applied Digital Corporation. And you can see right here, squeeze right here. I think I played this stock. Pretty sure I did. I found this using my consolidation box. But for the most part, here we are. You can see this high squeeze right here, squeeze number 1 into squeeze number 2, where it's actually taking off or firing. And you can see right here that it's not really able to sustain this rally after back tested this support right here. So this stock may be just range trading between $7.32 and $10. So that's what I expect anyway. It may retest 7 or it may continue back up. So we coming back to our scan, and right now we have our scan for squeeze 2 bear is true. So we can go to, I'm looking at stocks with 3 million volume. Today is Sunday, so it's giving me Friday's data. But stocks between 50 cents and $50. And let's give me some bullish stuff too, though. What's DV? It's coming back up. So, I mean, the move average still crossed below each other. And TTM squeeze is below. But for the most part, this one's trying to push back above. Find a support down here in this $47 level. Let's see, it's 45. I don't know. It needs to sustain and get it back above 49 to be interesting for me. But for the most part, this is a scanner. And right now, it's not really showing me a whole lot of great things. It's on the bearish side anyway. It's showing me a lot more bullish things. But let's see what the acceleration down shows us. So all these should be accelerating down. Some of these are in the squeeze, but for the most part, they should be accelerating down. I think I looked at this in FITB. There's your red dot right there. Because here's your acceleration up, acceleration down, acceleration up, acceleration down. So these should be accelerating down. Just looked at that one, so let's look at flow. You can see a red dot right there, and it's accelerating down. I'm trying to push down. This one gap down hard, and you can just see the accelerated move. Well, this is gonna be the end of the video. You decide to get this indicator, you get the actual indicator, you get the watch list, and you get the scanner as well. Because the scanner is working where it is, if there are any updates that are needed, I'll provide those updates for the scanner for free. But for the most part, I want to say thank you again for taking your time out to listen to what I had to say. I hope what I've said or information I shared with you has been beneficial for you and your trading. And as always, if you haven't already, please like, subscribe, and I wish you the best. And God bless and stay safe out there.